Hello, listeners. Welcome to the Pre-Market Update, the podcast powered by AI. I'm Joe.
And I'm Sarah. Today is February 16th, 2026. Let's dive in.
We are looking at a somewhat cautious start for the Indian markets this Monday morning. If we look at the early indicators, the GIFT Nifty is currently trading around the 25,448 level. That represents a discount of nearly 71 points from the Nifty Futures' previous close, suggesting that the Nifty 50 and the Sensex are likely to open in the red. We're seeing a bit of a hangover from the weekend news cycle. Looking at the movers, the IT sector is under particular pressure. There's a growing AI angst globally that is beginning to tighten the bear's grip on Indian IT stocks. Investors are worried that any disruption to traditional IT service models could stall the broader earnings recovery we've been hoping for. On the F&O front, we're seeing some nervous positioning as traders weigh these global cues against domestic resilience. While the Sensex has shown strength recently, the technical setup for today suggests we might see some profit booking at the opening bell, especially in heavyweights that have led the recent rally.
Thanks, Joe. Moving to the international stage, the picture is a bit more mixed. Over in the US, the S&P 500 and Nasdaq are coming off a session where benign inflation data actually provided some balm to investors. That CPI report has reinforced expectations that the Federal Reserve will finally pull the trigger on interest rate cuts later this year, with many traders now circling June on their calendars. In Asia this morning, things are a bit tepid. The Nikkei in Japan is seeing some fluctuations as the yen weakens following softer-than-expected GDP data. Meanwhile, the Hang Seng in Hong Kong is seeing specific action in names like Laopu Gold and CMOC Group, which both rallied after being added to the city's benchmark gauge. Over in commodities, we've hit a historic milestone. Gold has been trading above $5,000 an ounce. We're seeing some minor profit booking now, but the metal remains a favorite hedge. Oil is holding steady as the world watches for the resumption of US-Iran talks on Tuesday. And for our currency watchers, keep an eye on the carry trade. Emerging market currencies are currently proving to be more stable than the G7 majors, a streak that's reaching levels we haven't seen in 20 years.
That stability in EM currencies is definitely helping the Indian sentiment. But let's talk about the big corporate moves at home. The headline story this morning is a massive merger in the power sector involving a staggering $61 billion of debt. This consolidation among lenders to the power industry is being seen as a major catalyst for the Indian credit market. It should significantly boost financing for energy projects, which are the backbone of our growing economy. In the tech space, all eyes are on the upcoming AI summit in India. We've got Sam Altman from OpenAI and Sundar Pichai of Alphabet reportedly heading our way. This highlights India's position as a critical hub for AI talent. However, the market is currently in a show-me-the-money phase regarding AI. While the long-term potential is huge, the short-term reality is hitting our IT giants. We're also seeing the domestic earnings season wind down. It's been a mixed bag. And as the tariff-related concerns from global trade ease, investors are refocusing on bottom-line growth. Keep an eye on the power and infrastructure stocks today. They might be the outliers in an otherwise muted session.
It's fascinating to see that contrast between the AI excitement and the market's immediate skepticism. Speaking of AI, the big story in the US is OpenAI's latest move. Sam Altman confirmed that Peter Steinberger, the creator of the popular open-source AI agent OpenClaw, is joining the team. This signals that the race for autonomous AI agents is accelerating. Down under, the Australian market is buzzing. Hube Holdings saw its shares jump to a record high following a massive $8.3 billion takeover deal led by Macquarie. It's a 27% premium, showing that M&A activity is alive and well in the logistics sector. In China, President Xi Jinping is making waves by calling for the country to anchor its growth around its super-large domestic market to boost demand. This coincided with A2 Milk raising its revenue guidance because of strengthening formula sales in China. So, while there's talk of a doom loop in some tech sectors, the consumer and infrastructure sectors in the Asia-Pacific region are showing some serious teeth this morning.
Turning to the macro and geopolitical side, the global vibes are dominated by the Federal Reserve and the U.S. labor market. Even though inflation showed signs of cooling, bond traders are still on edge. They're looking at upcoming private payrolls data for a gut check on whether this recent bond rally has legs. Here in India, the RBI will be closely watching these Fed signals. If the Fed leans toward a June cut, it gives our MPC more breathing room to manage domestic liquidity without worrying about a volatile rupee. Geopolitically, the cooling of tensions between the U.S. and Iran is a massive relief for energy importers like India. If those talks tomorrow go well, we could see a further softening in crude prices, which is always a win for our fiscal deficit. However, don't ignore the noise from the U.S. administration. Trade advisors are suggesting that data center builders like Meta might have to internalize their utility costs, which could have a ripple effect on global tech valuations.
To wrap things up for our listeners, here are the key takeaways for the day. First, expect a cautious, possibly negative opening for the Nifty and Sensex based on the GIFT Nifty's 70-point discount. Second, the AI trade is in a confusing phase. While top CEOs are visiting India, our domestic IT stocks are feeling the heat from global uncertainty. Third, keep a close watch on the $61 billion power sector merger news. It's a game changer for the credit markets. Fourth, gold remains historically high despite minor profit-taking. $5,000 is the new psychological floor. And finally, keep an eye on the US dollar and bond yields. They are the North Star for market direction this week as we wait for more employment data. It's going to be a week of wait and watch punctuated by high-stakes corporate headlines.
That wraps up today's update. I hope you gained useful insights to navigate the markets this morning.
Add your thoughts in the comments and follow us for more such updates. This is Sarah.
And Joe, signing off. Stay sharp out there.